The first time I've heard the Lyft CFO, Chief Financial Officer, speak after their Q2 second quarter earnings. He's very excited about everything. So it's a long video, 10 minutes. I may cut it off, put the link in so you can finish it off at home. But let's check out what this dude has to say.
Well, the company reported earlier this week its first adjusted EBITDA profit in the quarter, posting $23.8 million. That timeline much quicker than the timeline the company had initially put forward. For much more on that, let's bring in our two Brians. We've got Brian Roberts, the CFO of Lyft, and we've also got Brian Sazi joining in on the conversation. Brian Roberts, good to have you on today. I hate to start on the headwinds in a quarter where all signs pointed to continued improvement, but you, along with your competitors, have made no secret about the fact that you have had a hard time attracting drivers to sort of meet this bounce back in demand. Give me a sense of what the metrics look like for you, especially in markets where those enhanced unemployment benefits have already expired.
Sure. No, maybe just to start too. I mean, we are super excited about Q2. It was a milestone quarter to your point. We achieved adjusted EBITDA profitability on an entire company basis earlier than we said we would. And we did this while we delivered industry-leading revenue growth. And so if you just zoom out for a second, and if you look at Lyft over the past 5 quarters, you can see the business transformation we unlocked during the pandemic. So very excited about that.
Very excited.
And if you look at what we did in Q2, we aggressively invested in building driver supply. We know the prices are too high. We know the waits are too long right now. And so we increased, if you look at our P&L, our contra revenue, by 92% quarter over quarter as we delivered this quarter. So very excited about that.
Very excited.
And then in the states where we did see federal unemployment get sunset earlier, we did notice that driver leads increased. And so we're excited about the pickup we're seeing on the supply side. Demand continues to outstrip supply. That is not necessarily a bad thing. I was, if you go back in time over, say during the pandemic, earlier in the pandemic, having more demand is a wonderful thing. I sleep better at night. So what we've seen in Q2, we saw a 60% increase year over year in terms of active drivers. And then another metric that we shared, which is really important because it's not just the number of drivers, but it's how many rides or how many hours are they delivering on the platform. And what we saw in Q2 was that an average driver increased the number of rides on our platform over 20% versus Q2 of 2019 pre-pandemic. So we're super excited where we are.
Super excited.
I'm even more excited where we're going.
Excited.
Hey, Brian, are you surprised by the market reaction to the quarter? Yes, a big sell-off yesterday. You had profitability for the first time. You went on the earnings call, said you were going to be profitable again, said the business model was going to be sustainably profitable. Why do you think investors reacted the way they did?
Quite frankly, I think people were afraid of what our competitor was going to report after the close. And I think there was just that overhang until they put out their announcement. But look, we're so proud of what our team delivered in Q2, and we love our strategy going into Q3. We want to continue improving service levels. We think that is the right strategy for Q3, but more importantly, the right strategy going forward. And we're able to do this while we actually, if you look at our outlook, we're increasing our adjusted EBITDA range for Q3. So we feel absolutely great about where we are and just the ability to invest right now, improving service levels. We know riders across the country want, shorter pickup times and lower prices.
For those new to the Lyft story, Brian, how have you been able to reach profitability? I believe you called out that marker in the fourth quarter of 2019. What have you done, and why do you think the model is, in fact, sustainably profitable?
Absolutely. Look, I've been at Lyft now for coming up on 7 years. So I've seen this company from almost the very beginning. And if you look at what we've done just in the last 2 years, it's all about focus. Like we wake up and go to sleep thinking about U.S. and Canada, transportation, and that includes everything from ride sharing,
about drivers,
predominantly known for bikes and scooters, Brian, and transit. We have rental cars, and it's just this focus. And so if you look at what we've done on the adjusted EBITDA line, if you go back a year ago, we had a $280 million loss that we just took up to a positive $24 million. And the consistency of the performance over the last 5 quarters. Every single quarter, we're getting better. And what we're trying to tell investors is, look, we're not only focused at maintaining adjusted EBITDA profitability, but actually increasing it. So I would chalk a lot of it up to focus. I'd also say, look, we're founder-led, and it means something. John and Logan have been thinking about transportation for over a decade,
drivers,
and it means something to have founders that are so passionate about that, because they attract team members who believe in the vision and the mission. And just when you think about what this company has faced in the last year, be it the pandemic, be it California regulation, we faced a lot, and the team just stepped up. And so the resilience and just that tenacious focus on delivering is bearing out in our numbers. So very excited.
Very excited.
Yeah, I don't want to take away anything from the profitability on an adjusted basis. When you look at it on an unadjusted basis, the net loss for the quarter, $251.9 million. That was larger than what analysts expected, $230.1 million. We saw the stock down originally when you reported the numbers. And when you look at maybe a piece of that people are interested in is the amount that Lyft has to pay to attract the drivers. As you said, it's a big important piece of the customer experience on the platform. So how much more have you seen those prices to attract drivers rise? You had some estimates, it was 12 million during the quarter to get drivers back on. How are you seeing that cost rise, and what was it in the quarter?
Sure. So I think there's where I think there may be some investor confusion is that the higher prices are paying for the driver incentives in terms of how it flows through our P&L. And so if you just look at Q2, literally the quarter we just reported, we increased what's known as contra revenue, these incentives, by 92% quarter over quarter. So we went from 196 million to 376 million, while we delivered adjusted EBITDA profitability and higher contribution margins. And we've guided even to higher contribution margins in Q3 when you adjust, because we did have a little one-time, probably about 100 basis point benefit in Q2 in contribution margin. But I think where investors are confused is the higher prices are funding these incentives. So it is in terms of how it flows through our P&L, you couldn't invest as much as we did and still generate adjusted EBITDA profitability if it wasn't being funded by the higher prices. But we don't want to rely on that. We're really focused on improving long-term rider satisfaction. We have to improve service levels, and that's both pickup times and prices. So we're going to keep pushing. And again, if you look at our outlook for Q3, we're doing this while we increase adjusted EBITDA in terms of our outlook.
Brian, what's the conversation within the company right now about vaccine mandates for drivers as well as passengers? We've seen a number of firms come out and mandate vaccines for employees at the corporate level, but not necessarily the frontline essential workers. Why has Lyft been hesitant to do that, and do you think you'll move on it?
Sure. So as it relates to Lyft employees, we have mandated to return to the office, you have to be vaccinated. We think it's the right thing in terms of safety,